Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson Ag Mix traded both grain and livestock futures here as we roll through the midday session over in the grains. You do have the row crops lower, wheat is higher. And Randy, I'm not sure if we should start off with the good news or the bad news first, but let's start off with wheat. It is higher today, putting in a little war premium with some developments over the weekend, but kind of a muted response. And boy, we were down hard last week considering all the Black Sea war news we had.
We were. I mean, yeah, last week it seemed like we were pounding wheat a little bit extra harder than we needed to, but we are seeing a little recovery, especially the winter wheats. Chicago, Kansas City seeing the best strength. They also had the worst performance last week, but yeah, a little bit more developments. We're starting to see, Russia is trying to retaliate against some of Ukraine's retaliation. So it seems to be tit for tat over there. But right now we are seeing a little bit more of Ukraine's attacking some of Russia's vessels. And of course, Russia is coming after some more of Ukraine's ports. So that's helping to support the grain markets. It's really kind of, I think, a signal that, they're trying to get this Black Sea initiative going again, but it doesn't look like that's going to happen, especially now with all the damage that's being done to a lot of the Ukraine ports.
But Randy, we really don't have a lot of war premium in this market, do you think?
No, not at this point. I mean, last week we took a lot out of it. I mean, we're sitting back down to, support lines. Actually broke through some support lines in Minneapolis last week. So we really have no premium in this market, whether it be for weather or whether it be for the war. We're still, we're about done with the winter wheat harvest. We're getting, close to getting, the good start to the spring wheat harvest. And yet this market just doesn't seem to go anywhere. And it's not just the futures. Basis levels continue to be very poor as well.
No doubt. And what are you hearing in terms of spring wheat yields on some of the early harvest results out of North Dakota so far?
So far we're hearing, everybody's saying it's a little better than they expected, which, you kind of expect once we weren't really looking for a lot. But for the most part, most of the yields right now coming in between 35 and 45. You'd expect this early stuff to be the worst. I think once we get the combines rolling in Western North Dakota, we'll start to see a little better yield.
And wheat did not do any favors for the corn market last week, but corn this morning seems to be more driven by the fact that soybeans are pulling back here. So let's talk about soybeans first. Some pretty big losses with some pretty decent rains over the weekend, right?
They were. I mean, we had good rains, going across southern Minnesota, Iowa, Illinois, up here in the northern regions. It was good rains, but they were spotty. We continue to see very spotty activity for the rains. Most people picked up about inch and then to an inch and a half. There was some that were up to 7 inches, but for the most part, it was a good rain. I think you look at the forecast going forward, we've gotten the rains this weekend. There's more rain in the forecast, and we've cooled down these temperatures. It's almost ideal growing conditions for the last or for the critical crop development stages for soybeans, which they're setting pods. So this is kind of negative news for the beans. It's just adding to the pressure.
Yeah, and they lost about 50 cents on the new crop yesterday, I think, over $1 off of the highs right now. So is there much more downside risk? I mean, technically we're holding the 100-day moving average. So that is got to hold here.
Well, we'd like it to. Yeah, this 13 is pretty important to hold. And if we break and close below $13, then I think we could open this market up to try to test that 1240, 1245 level. So we do have some room more, down to the downside. But one nice thing is we're starting to uncover demand as we saw some exports come into play.
And we have the WASDE report out on Friday. So how hard does the market or do the funds want to push this thing going into a report?
Yeah, especially when this report's going to be fairly, important. I mean, everybody's going to be looking to see what USDA is going to do with demand on this one, and if we're going to see any kind of yield reduction or yield change. Which right now, with these rains and with everything the way it's looking, I don't expect to see any change to the production side or the supply side, but I could expect to see some adjustments to demand.
And as we mentioned, corn had a down week last week. Wheat did not help. Today, spillover from the soybeans or what?
I think they're in a tug of war. I mean, they're trying to go, hold their own, but they are seeing some pressure. I think it is some spillover from the soybeans. I mean, the rain that fell for the soybeans is also going to help with the final finishing of the corn, the cobs, and to get test weight. So it's going to help corn a little bit, this recent rain. But for the most part, I think they're stuck in between the pressure from the soybeans and the strength from the wheat.
Yeah, I thought they were in a tug of war here this morning. And exports, let's talk about that. Are prices low enough where we're going to start stimulating some demand? We saw a little business to Mexico this morning. Is this tell us that there might be some hope on the horizon?
It does, and and I think we are to low enough levels, and I think a lot of the buyers are looking at this and seeing that it's a buying opportunity to come in and get some needs met, and so I do think that we are low enough. It's just going to be a matter of whether we start to see some countries start to want to buy. Our dollar has been dropping; that's helping. We're seeing the real, starting to rally a little bit, and it's tougher to get the product out of South America right now as their ports are jam packed, and it's a little tougher to get just in time inventories. So I think that's what's helping to bring a little demand to the US.
Yeah, I'd heard we were a little more competitive. Technically, though, we've got to hold the July lows here and the December corn, don't we?
We do, just like we're looking at in soybeans. We're at some critical levels right now. We have to hold these levels. If we don't, we could see that market, the corn market break down to 450, which wouldn't be a very pleasant sight at this point.
Cattle market is sitting back here after some new highs in the feeders, especially. I think we had a few new highs over in the live cattle futures on Friday as well. But we're consolidating. Is that profit taking by the funds, hedge pressure? What's going on there?
I think it's a combination of things. I mean, right now we seem like we can go up to the old contract highs or at least just get into new contract highs, and then we run into selling in this market. I think, our supplies are going to continue to be tight. I don't think this market has paid attention to the recent hot spell that we've had. I think there was a little more death loss than what the market is wanting to absorb at this point. So I think Packers really, are short bought, but they're starting to slow down their chain speed. So I think that's kind of countering why the need for them to come in and have to bid aggressively for product.
Yeah, but did they also have formula cattle in the South? Maybe they pulled ahead last week and used because, I mean, we had some good cash trade in the North, and we do know the supplies are much shorter there.
I think they did. I mean, that seems to be what they're looking at doing is whenever they start getting short, they start bringing in their formulated cattle and running those kills. So, and they haven't really had to be aggressively going out into the cash market. Pretty soon they're going to have to. I mean, our supplies are going to continue to tighten up, and it's going to be tougher to find the slaughter-ready cattle here once we get into, I think, early fall.
And the hog market lower right now, and we did have our first lower weekly close for a while. Yet the funds actually added to their long position on the commitment of traders report. But, seasonally, we generally top this time of year. Do you think it'll be the same pattern normally because we have such big discounts in the back of the board?
That's what's going to make it tough. I mean, you know that, yeah, we're running at such a huge inversion in this market. It's going to be tough for those deferred contracts to stay down, especially if cash is up in these levels. So I would expect we're going to try to meet in the middle somewhere. I do think that the futures have some room to move up, but it's going to be limited because, as you mentioned, seasonally, this is not a good time for the hogs to be seeing a big rally.
Yeah, no doubt. Thanks for joining us, Randy Martinson with Martinson Ag. And that is Markets Now.